listen, it's a really dynamic space, right? As we've gone through COVID and hopefully coming back to a normal economy, going into the economy, I talk about the three I's of the economy being basically that the economy is moving more immediate, the economy is moving more integrated, and the economy is being interrupted, right? So consumers, businesses are expecting immediate interaction associated with their transactions. They are expecting an integrated experience, right? So you order your coffee online, you get immediate confirmation about what time it's going to be available. If you get a response from, and you don't get a response, you actually don't feel interconnected with that experience. And businesses in the same thing, right? If you think about all the cargo ships stalled in the port, and they are trying to get real-time updates with where their shipping information is. People are expecting that immediate and interconnected experience, and if you're not doing that, it's going to be interrupted. So as you think about how businesses are driving towards and thinking about payments, they're really trying to figure out ways in which they're going to interact more immediate and a much more interconnected experience, which speaks to a lot less check, a lot more electronic payments, and a lot more integrated experiences, so that when you make a payment or you receive a payment, you're giving people or getting immediate confirmation about the transaction that was done. So that's a really different change from how, if you think about how most payments occur in the US, which is kind of, send it and forget it, versus today, it's send it and get immediate confirmation. Yeah, so when you think about the three I's of the economy and how we're thinking about that, I like to use practical examples. So think about today's gig economy worker and the whole notion, or the challenges with the labor market. People are really moving towards a work today, get paid today. So work today, get paid today is, no one's writing checks for work today, get paid today. And even ACH, for that matter, doesn't work. If you end your shift at 5 o'clock, there's no ACH at 5:30 at night that's going to impact your account. So there's really this move to real-time payments, to push to debit as a means of moving money basically 24 hours a day, 7 days a week, right? If the shift ends at 10 o'clock at night and it's work today, get paid today, that employer is really going to have a different solution and think differently about how they're executing. So we've really been very focused on treasury management as a platform, and having a platform of services that allow our customers, whether it be through APIs or digital channels, be able to execute anytime, anywhere, in the manner in which they want to execute to move money. And as I go back to the three I's of the economy, that work today, get paid today example is really a great example of people wanting immediacy and want interconnected experiences. Yeah, they're really having to think very differently about how they run their processes. So whether it be AR, whether it be AR or payroll for that matter, right? In AP, if they're using a lot of contract workers and that contract worker is going to work today and get paid today, if you were running AP once a week, maybe you're running AP every day now. If you're, once again, on payroll, it's the same thing. If you're running payroll every 2 weeks and now it's work today, get paid today, you're running payroll every day, right? Those are very different impacts as to how customers are thinking about things. Now, I will say also, as businesses, as the technology continues to mature, right? People are looking to, upgrade their infrastructure in their companies, and they are going to a much more real-time process in how they're doing things internally, and that's also transforming the way they're talking to their banks, right? So, customers now are using APIs to talk to their banks, right? So, you're in your ERP system, you push the button and you get your balances real time loaded to your ERP. You're not swivel chairing over to a bank's online portal to get your balances, or executing a payment out of AP and the payment's approved and you push the button and that payment's executed off real time to the bank. So it's a really different way in which corporate customers are thinking about how they're working with their banks, but it's also critical to how they're just running their business, right? Everything's becoming much more interconnected. Everything's becoming much more real time, and you see that going back and forth with between the banks and their customers. Yeah, you'll see. We have several things underway. We have a really strong healthcare business where we actually help those healthcare entities prevent denials of claims by providing them insight on their claims before those claims are actually submitted. So that's a great example of using data. The next is cash forecasting, right? So a lot of times we have a lot of information about payments that are flowing through our ecosystem that are going to influence a customer's cash position, and we can give them a lot better insight to what their cash forecast is going to be. So those are two really good examples of being able to use data and being able to turn it into valuable information that a customer can act on. To your point, having a data lake or a reservoir of data, but not being able to make sense of it is not helpful. And the last thing I would just say is back to security and fraud. Obviously, the data and the patterns associated with how customers are transacting really do help inform providing safety and soundness to the financial system and leveraging that to help protect the participants in the ecosystem. Yeah, so listen, I'll start with the second part of that first, which is really businesses need to continue to think about the dollars and the data associated with the payment moving together, right? Almost every company hates playing what I call match game, where you get money in through some means, and then you get information associated with that payment through a different means. And so therefore, you have to sit there and match the payment and the data together to apply it to your receivable system, right? So I always say the information is actually more valuable than the money. And if you have the money in your bank account, but you can't apply it to AR, it's not helping your day sales outstanding, et cetera, or any of the metrics that your AR metrics that you're driving your business off of. So as people, and goes back to the interconnectedness, people are expecting interconnected experiences. The only way you're going to be able to tell somebody that, hey, you got the payment and you applied it, is that you actually got it and had the information associated with applying it. So I think there's going to be that big transformation that people are starting to get the reality of, like, the information and the payments need to go together. The second thing is that in today's digital world, people are more and more interested in protecting themselves, preventing fraud, right? And I think you'll continue to see a lot of movement by the financial institutions offering solutions that allow people to make payments using aliases, right? So PNC Bank was one of the first banks in the country to connect Zelle to the real-time payment networks so that aliases, can be used instead of banking information to transact between financial institutions. And I think you'll continue to see that blossom over the next couple of years. That really helps drive down, corporate customers don't have to maintain banking information in their systems. They can use aliases, and it's going to really improve the security of making electronic payments, but also it's going to take a lot of friction out and make it easier over time.